All right. Good evening once again, everybody. My name is Prince Ikilowe. Tonight we are going to be talking about the ABC of Forex. I call this the ABC because as a trader, as a beginner trader, you need to understand all these things. And it is all about candlesticks. And it is called Japanese candlestick. So first of all, let's talk about what is candlestick. A candlestick is a type of, I hope you are taking notes. A candlestick is a type of price chart used in technical analysis that displays the high, low, open, and closing prices of a security for a specific period of time. I hope you can you guys hear me very clearly, please? Can you hear my voice? If you can hear, type yes. A candlestick is a type of price chart used in technical analysis. Okay. All right, good. A candlestick is a type of price chart used in technical analysis that displays the high, low, open, and closing prices of a security for a specific period of time. All right, ladies and gentlemen, if you're just coming into trading, the first thing you need to understand is that there are tools that are used in checking price movement, and those tools are, one of them is called Japanese candlestick. The first thing you need to understand is how does it work? Where is the high, where is the low, and how do I understand all these things? I know that at first time it's confusing somehow, but with practice and learning, you can understand what candlestick is all about. So if you look at this particular chart, this picture here, you see that this is a candlestick. It could be red, it could be black, it could be any color. But this represents a candlestick. What you're seeing is here is the lowest of the candlestick. This place here is the open, and this is the highest. Look at how it works. This candlestick probably is a down, this represents a bearish candlestick. So it means that the price open here, this top, it went up a little bit, and this is what you're seeing is called wick, W-I-C-K. W-I-C-K. This up you're seeing is called wick. So the market opened from this place. I'm going to show you on a live chart how it looks like. So when the market opened from here, it went up, but eventually came down to this place. All right, but the market didn't close there. Later now closed on this particular place. That is why you're seeing this as a wick. So anytime a price touches a particular price level, but didn't close and leave that particular place, it gives that place a thumb print, and that thumb print is what you're seeing with, just like somebody going to a beach. You know, when you use your leg to match a beach, as even if you have left, you can see the mark on the leg on the beach where somebody has actually matched. That is how Forex candlesticks works. So whenever price goes to a particular point and didn't close there, any little thing that happens, price changes direction, it's going to show this as a wick. It's a footprint that shows, and that is called wick. And once you see a wick like this, it represents a lot of things in the market. Look at this one here. We have two candlesticks. One is the bearish, one is the bullish candlestick. The green represent price going up, while the red represent price going down. This picture is not too clear, but let me try and explain this. Remember, the first one was a bearish candlestick, but it's in blue, but now you're seeing red and green. For this is the opening of the candlestick. Price opened here. It was as if it wanted to go down, but it didn't go down. It went up, but eventually closes here. So it open here, closes here. This is the lowest, and this is the highest. All right. And what you're seeing here is the wick, W-I-C-K. The same thing happens to the red candlestick you're seeing. Somebody said no audio. Please, is my audio not out? It could be your, if my audio not out, please. If you can hear me very well, can you type 111? Very clear. Okay, somebody said very clear. Okay. That means Kenneth Ejiofor, it must be from your end. All right. So this is how it works. This is a bearish candlestick, and according to this candlestick, this was the opening price. All right. Now, price went up a little bit. Like I told you, anytime price make a move, it prints, it puts a fingerprint or a footprint. Let's say footprint. So this footprint that is print is called wick, but it didn't close there. It went all the way down. It didn't close there. It came down eventually and closed here. So this is the lowest, and this was the highest of the candlestick. So let me take different type of candlestick in the market that you need to watch out for. It's very important when you see this kind of candlestick, and candlestick means a lot in the market. So you have to study candlesticks. There is a book I'm going to say, I think I've sent to you, to most of you guys. It is called Candlestick Bible. If you learn that Bible very well, if you read that Bible very well, that candlestick book it is called Candlestick Bible by one great author. It illustrates so many things. I'm talking about candlesticks. And all these candlestick formations means a lot. So you have to understand them very well. Otherwise, somebody said, yes, you sent it. Yes, I sent it to everybody who have paid for this class. So that book illustrates the meaning of all these candlesticks and when to use them. Now, if you look at this candlestick, it is called, some people call it hammer, some people call it kangaroo tail, some people call it whatever names, pin bar, whatever, but the names doesn't really matter. This is a good signal of a selling pressure. When you see a candlestick, it means that price open here. This was the lowest. This was the highest it got. What that means, that price open here went all the way up as if it was going up, but eventually closed here. So it shows this kind of long tail and a small body. When you see price show a small tail, a long tail with a small body, that represents a selling pressure. Buyers were trying to overtake the market, but sellers overthrew them and brought the market down to this level. This is a clear indication of a selling pressure. And when you get to the advanced class, you will learn more about this, trading this kind of candlestick patterns. If you see this kind of pattern on a zone, for those of you who are already trading zones, if you see it on a zone, if you add it to your trend line and other confirmations checklist, you will understand that this is a selling pressure. The same thing, sometimes you see them in green, but it's in red, it's still a selling pressure. You can even see them in green color. It still shows a selling pressure. So this is it. This is a selling power, a selling opportunity. If you see this on a zone, resistance zone, this shows that price is ready to go down. So you place a trade after this particular candlestick formation. The same thing with this. If you see something like this, it's actually a buy signal. This is a long wick, a very long wick, and a small body. The color doesn't really matter. Sometimes you can see them in green color, you can see them in red, but the color didn't really matter. I will show you on a real chart how these things has worked and how you can make money by understanding these candlestick patterns. Okay, are we clear on this? Are we clear? Are we getting it? Are you getting what I'm saying, guys? If you're getting what I'm saying, can you type yes? All right, good. Now we also have what is called bearish engulfing. These are buying, selling signal. It's also a candlestick pattern that enables you to understand when to buy and when to sell. Whenever you see this kind of, it's called bearish engulfing pattern. Whenever you see this kind of candlestick formation, it means that the price is ready to go down. This is bearish. This one is small. This is a buy candlestick. Then you see something like this. It's called bearish engulfing. Once you see something like this close to this small one like this, and you are seeing this on a resistance zone or on the turning point, you know that this is a selling power. You can sell after this candlestick has closed. So it is called bearish engulfing. This was the highest it got. This was the opening. It opened here. It got to this place at the lowest, but eventually closed here. This is the buying, a selling signal. Now we also have engulfing candlestick. And this is called bullish engulfing. For bullish engulfing, the same thing. If you see two candlesticks like this, all right, and then one is bigger than one. The bigger one shows you a green color, which signifies buy. If you see this on a zoom, those turning points that we are talking about when it comes to technical analysis and price action trading. If you see such kind of candlestick close to this kind of big candlestick close to a very small one, it shows that there is a buy power. So you need to be ready to place a buy after the end of that particular, the closure of that particular candlestick. So let me take you to the race chart, to the new I'm going to show you the chart ray market so you can understand what I'm trying to talk here about. All right, can you guys see this? Can you guys see my screen now? Can you guys see my screen now? All right. Okay, good. Now, if you look at this candlestick, look at this pin bar. Can you see this pin bar? These two. Are you seeing it? Look at this first one and this second one. Can you see it? One is red and one is green. Can you see it? They look like what I was explaining to you. Let me show you something. They look like this. I was saying, look at them. These two. I told you that whenever price touches these two zones, all right, when you see something like this, it's a buy signal. When you see something like this, it's a buy signal. So look at what happened. To show you what, illustrate what I was talking about, look at what happened. This one first showed, you can see that two of them are the same, the same pattern, but different colors. One is in red and one is in green. You can see that after the formation of this candlestick, because this place is a turning point, it's a zone. You can see that after that, price moved all the way up down here, all the way up, all the way up. And you can also see vividly, if you can look at this chart very well. Let me delete this. If you can look this one very well, this one presents, it shows, can you guys see, if you can see this small green candlestick, type 1. If you can see this small green candlestick, type 1. This one I'm touching right now. If you can see this small green, okay, good. All right, good. Now in advanced class, we taught you how to identify turning points. All right. Now, once you have identified turning points, you want to be looking at for candlestick formation like this. Look at this candlestick. It shows, it's like the other one I showed you. It's like this one. It's like this one or this. You can see that after the formation of that candlestick, the price actually fell. Look at, after this, price fell down. Look at another example here. Look at another example here. After this, price went up before even coming down. All right, if I go back again, I will show you examples of how this whole thing works. Examples of how this whole thing works. Okay, let me go back. Can you see this? Can you guys see this? Can you see this? If you can see this, say one. No, yes. If you can see this, say yes. Type yes. If you can see this, say type yes. Yes. All right, good. This also shows it that the price, this thing works. Okay, good. So the candlestick, this one is called Bullish Engulfing. If you look at it very well, this candlestick completely engulfed this. It shows you like something like this. It reminds you of what I was talking about engulfing. This golf, look at this. You can see clearly with your eyes that after the formation of this particular bullish engulfing, bullish meaning buy signal, right? They call it bullish. After the bullish engulfing candlestick, you can clearly see that the price went up. Look at it. The price went up. I can show you examples on how. Look at another one again. Another bullish engulfing. You can see it clearly. All right. I'm going to show you examples of this candlestick. So what am I trying to say here is that you need to understand all these candlestick patterns. Once you understand these patterns, look at what price is happening here. It's also, if price, this is daily time frame. If the price closes like this today, it's also a sell signal because it shows that there is more seller. Buyers, we are thinking they are strong, but it seems the selling pressure is still going to overtake the buyers and it will push the price down here. We are watching this market. Is showing you a week, a very long week. And the colors you see doesn't really matter. You can color your chart anyhow. If you want to color it black, if you want to color it red, if you want to color it blue, it's up to you. Blue, for this particular color that I did, the green signifies buy, which is going up signal, while the red signifies a down movement, which is bearish. So this is how candlesticks works. Let me also show you how to understand. I'm going to show you how to understand market charts, so that when you see a chart in that formation, you know that the market is either on a downtrend or on. So let's talk about downtrend. Okay, so this is an uptrend, price on an uptrend. What is an uptrend? I want you to guide these things. Now, these things can be, this candlestick pattern you're seeing, there are also other patterns that you can use, not just candlesticks. There is also line chart. Like this one, what I just showed you is a candlestick chart. It's not only candlestick you can use, there is also line chart. They call it hollow. This one, they call it bar chart. This one is bar chart. This one is candlesticks, while this one is line chart. They are all a tool to show you the movement of the market. For the line chart, it shows only the closing price. It doesn't show the opening, it shows only the closing price. We also have candlestick. So this is the candlestick I was talking about. It is more commonly used than any other chart. So let me show you how to understand when price is on an uptrend and when price is on a downtrend. So for instance, you're seeing here is an uptrend. And what is an uptrend? Going long on an uptrend, buy the dip of the uptrend. For an uptrend, price makes higher highs and higher lows. This also means the market is bullish. For an uptrend, price makes higher highs. If you look at this price makes higher highs. It comes up. This high is higher than this. This high is higher than this. Higher highs and higher lows. That is, when you see a price doing higher highs and higher lows, it means the market is on an uptrend. An uptrend is when price makes series of higher highs and higher lows. Look at this. Anytime you see something like this, you can use a small a daily time frame to ascertain this price. For you to know the movement of a particular market, the movement of a trend, use a higher time frame to see if it's showing you higher high and higher lows. Uptrend, then for a downtrend, you're going to be seeing price making series of lower lows and lower highs. This means market is bearish. Whenever you see a market doing higher lows, lower lows, lower lows, lower lows, this shows a downtrend. Are we together? So you buy when you see something like this in the market. Once you see something like this in the market, you want to be looking out for a sell opportunity only. Or the price makes series of higher highs, higher lows like this, lower lows and lower highs, but rather lower lows and lower highs. You sell from the top. You don't sell here. You wait for price to come to the top down here. If this push move down, you miss it, don't chase the market. Allow it to come up down here. Then, plus I will appreciate the replace my battery. Okay. So what it means is that, all right, you said I will appreciate the replay. Okay, my battery is 3%. Okay. How do you know when the price is high to sell? All right, Samuel, what I'm explaining here is this. When price makes series of higher highs, when you see price doing this, it shows that market is on a downtrend. And on a downtrend, you want to place a sell. These places are selling opportunities. All these places are marking in blue arrow. They are the places you sell. After price move down, you don't sell, you sell up here. If you miss this place in case, you don't chase the market, allow it to come back and do this higher high. Let me show you with my, let me show you something with whiteboard. All right. Whenever you see an uptrend, it will do like this. Price will push up, you come down, it will push up, it will come down, it will push up. When you see something like this, it shows that this is an uptrend. So when you see this push, if you miss this push up, wait till price come there. When price come down here, you cannot jump in for a sell, for a buy. All right, it will push down again before going up. You wait for this push to come down, you buy from here. Very clear answer, okay? You buy from here. So you don't chase the market. You cannot draw a trend line. You cannot draw a trend line and expect the market to be coming down to touch this trend line, go up, touch the trend line, go up, come the trend line, go up. So these are the places you place your buy. If you start from here, you can be taking your profit here. But if this happen again, if you are late, if it happens here, after this movement, don't buy again. If you see something like this, don't buy. How do we draw the trend line? Okay, that is going to be, I'm going to be showing you how to draw trend line. When this push happens, you don't buy. Allow the price to come down, then you buy. If you see this push again, don't rush and enter. Let it do like this before you buy, a push back. Let me show you in a real chart how this looks like. All right, now I'm going to show you with another instrument. Okay. This is boom. Somebody, what if it breaks the channel? For instance, if price break this channel, if price break, if this market is on a downtrend, if price break this channel upside, you don't rush and enter. You allow it to break it. If it breaks the channel, for instance, it breaks from here, you don't buy. You wait for the price to come down first to touch the trend line. All right, before you can now say, okay, because it must come down before you now say, okay, I'm going to buy now. You will now do this buy. But this is a little bit advanced for people who are new here. This is a bit advanced. So what we are doing here is just to show you the difference between the candlestick patterns. Okay, for you to draw a trend line, I'm looking for a trendy market now. Let me show you how to draw a trend line. Now, apart from trend line, there's another market called, let me talk about that market first. All right, it is called price in consolidation. When you see price in a consolidation mode like this time around, the market is not going anywhere. It's going up and down, going up and down. It's called consolidation or ranging markets. And you can actually make money from a ranging market because at that time, you've seen people buying from top to the down, buying from the top and sell, buy from the down road, for the bottom and sell from the top rather. Oh, so this is called ranging market or market in the consolidation mode. All right. What if it based? Okay, I think I've answered that question. All right, let us learn how to draw trend line. Let us draw trend line. Like this now. This one is called shopping market. When you see market like this, it is no longer, it is called shopping market. Very, this is not a good place to trade. When you see price in this kind of mood, it means that the price is in a shopping mode. It is not a good place to trade. It is not a good place to trade. The market is in a shopping mode. It's not a good place to trade. You can't even understand where the price is going to. You have to allow this to finish first. Allow this to finish first, then you cannot think of buying or selling. So, okay, let's see how we can draw a trend line. A trend line, remember I told you that a trend is when price makes series of higher high and higher lows for an uptrend, right? Okay, let's look for that opportunity. I think we can say okay. Let me remove all these things. All right, if you look at this market now, I drew this trend line. Okay, for a downtrend, this is how it works. If you look at this price was coming up here. It came down, it pushed up. It came down again, it pushed up. Now, this first push and this second push is a signal that the price has started forming a downtrend. So now, once you've seen this in the market, what you need to do is just go to your trend line. Look at the tool here, trend line. Just go to your trend line, connect the first touch with the second touch, right? Then draw it down. Remember, when you are doing this, you have not seen all these other ones. You have not seen all these ones. Maybe after this touch now, this last touch, you just draw your trend line. All this time, you have not seen from here down. All this one has not appeared. So once you draw it down now, if you enter from, you'll be expecting price to come back and test this trend line. Once price comes up to test this trend line, and if it gives you candlestick like this, candlestick like this, candlestick like this, candlestick like this, if you touch the trend line, the third touch is their trading signal. The first and the second touch is the confirmation. All right. But if you are not selling here, after price comes down and come back for the third time, that is when you know that the price has really formed a downtrend. So now you have drawn your trend line. So allow it to come back and touch this place. Once it comes back up here and touch this place, you know that the market has turned it has formed a downtrend. And if you look at this market, it's actually a downtrend. You can do this with any time frame. If you want to use daily time frame, if you want to use 1 hour time frame, it's up to you. Your personality. Are you a day trader? Are you a swing trader? Are you a scalper? Any time frame you're using to trade, it doesn't really matter. But if you use 1 hour time frame and you see this kind of movement, it means that the price is on an uptrend with that 1 hour. And every time frame will show you different pattern of charts. You can see that this is 1 hour, but in 1 hour, it doesn't look as if it's a downtrend. It's just showing you market is not straight. It's not, nobody even understand the market. If you look at, okay, this is 4 hour rather. If you look at 1 hour, what about 30 minutes? What is the best time frame for beginners? Okay, the best time frame for beginners is to use higher time frames. Start with higher time frames because the higher time frames filter the market, the chart better than the lower time frame. Lower time frames are confusing. They are very fast. Price makes a lot of noise. You don't really understand. The movement is not really lower time frame is too fast for beginners. Beginners, the best is use higher time frame, like 1 hour, 4 hours to be seeing your market. Use like daily time frame to see whether the market is a trending market or not. Use like now, this is daily time frame. Use it to analyze if this market is a downtrend. Once you connect one, after it does it, like now, this is a downtrend. But entering point, you can be using smaller time frames to enter. But for a beginner, I think the best time frames to be using is higher time frame. Don't be a scalper. Scalpers are people that get into the market. They want to collect money fast and go. They are scalper. But for a beginner, scalping is very confusing. So it's better you learn how to become a swing trader as a beginner. So this is how you draw your line. You connect the first line, the first touch to the second line, and then you draw it down. Then you were expecting price to be touching this trend line. If you enter from here, taking profits, if price come back here, you enter again. That's how you trade trend. If you come back here, you enter again until if price wants to. How can you find this V75 in trading view? Okay, if you want to find V75 in trading view, it's very simple. Let me show you. Let me show you. You just go to your trading view like this. I say trading view, go to your binary.com account. And what is the good equity for long time frame as beginner? Okay, I think you should have, as the trading is going, you have capital, but from $100 you can invest. You can start trading. From $100 and above, you can start trading. But when you are trading like something like V75, I will advise you are very careful. You need to use proper risk management. We are going to talk about proper risk management in our next classes. So once you come to your, what is it called, binary.com account, you come here, you click trading view. Once you click trading view, you edit it. It now type 75 and then you click enter. Once you click enter, you have now on V75 on trading view. That's how it works. I hope you guys understand what I've explained so far. You've understood time, you've understood what is candlestick. You've also seen the different types of candlestick patterns. You've also learned how to draw trend line. And you have also known how to place a trade when market, what time of the day is good to analyze trade. Okay, what time of the day is good to analyze trade? For our currency pairs, it depends on the currency pair you're trading. If you're trading the USD currency pair, New York time beginning from 1 p.m. Nigerian time is a good time to look at for Euro USD pairs. If you are trading the GBP pairs, the good time to trade is that morning time at 8 o'clock. The mornings, the beginning of the market openings are the best time for you to trade all these pairs. But for V75, I think midnight, I usually have good trades in the middle of the night. From 1 a.m. down is a good time to trade. If you can be awake, that early morning, 5 a.m. too, is very good to trade because most of the time market is very, very volatile at that time. For the VIX, for the indices that we trade, indices do not actually have anything to do with news. So most of the time they are good at that particular hours of the night. So guys, if you don't have anything right now to ask, we have come to the end of this beginner's class. And I want to thank you for coming. I want to keep encouraging you to do what you're doing. What you're doing is the right thing. You're developing the greatness that you have in you. How can you know the end of an uptrend or a downtrend? When you get to the end of a downtrend, it will, okay. Let me show you something to answer that question. Okay, please can you view it, sir? Today class, I just came in due to net. I think I'm going to put the video on the Telegram group so that you can see and watch. Okay. All right. Now, for instance, this market is showing you that it's a downtrend. All right. Now, how will you know that a downtrend has come to an end? It's very simple. If this price now, instead of coming down, this place, instead of coming down here, the price now as it is returning, if you break through this trend line that you have, this was your downtrend line, right? If price breaks through this downtrend line, like going up, 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 and then it comes back again, like if it does this, now it's trying to do that. Yes, I'll put it on the group. Okay, if price now, instead of going, if price do this, right? Price do this. If you break through this trend line now, and then come back to touch it, and then make a sign of going like this, it means that the market has actually, the uptrend has, the downtrend, the downtrend is gone. If price break through your trend line, not that if you break through, it has gone, but if you break through, come back again to touch the trend line and show you something like bullish engulfing candlestick from here, that is a signal that the downtrend has gone, it has come to an end, and the uptrend is beginning to form. There, you need to now stop your buy, your sales, take your profit and get out of the market and start buying. That is the beginning of a close or an end of a downtrend. What strategy is the downtrend and uptrend? What strategy? But what strategy is downtrend and uptrend? A downtrend and uptrend is not really a strategy. In every market, there is what you call downtrend and there is what is called an uptrend. So you need to know with your eyes if the market is on a downtrend or the market is on a downtrend. So in a downtrend, you sell, and in an uptrend, you buy. How can trade be placed? I told you in a multimedia, I think you need to watch those videos I sent to you. Watch pending orders, watch Forex 101 for beginners, watch those videos, watch pending orders, watch pending orders part 2, all those things are detailed, explained there. You can learn everything there. So if you are just coming, you need to take some time and watch those videos before you attend our classes. Even if you attend our classes, it should start from those videos. After analyzing on daily time frame, what time frame will be good for entering? You can use a smaller time frame for entering. For instance, if you see that the market is going to be buying from here, if daily has showed you that this is a zone, you can go back to maybe 1 hour for a quick entry or 4 hours for a quick entry. Can we use support and resistance in uptrend and downtrend, or we will learn it later? Can we use support and resistance? You can use it for an uptrend, of course, or a downtrend. Yes, you can use it for that. But support and resistance play a different role, and trend lines play their own roles, but they can be used together to give you a better confirmation. All right, let us come back again on Thursday, but this video, I'm going to post it on the group. You can watch it again and understand what has been explained. So guys, commit yourself to learning. For those of you who are new right now for this academy, my goal for you is to help you develop this greatness. You have made a decision to learn this Forex. It shouldn't be that you just make a decision without taking action. My mentor said, affirmation without action is the beginning of self-delusion. So you have made a decision to say you want to be a trader, and every decision backed by action is what is subscribing to a signal group. Subscribing to a signal group is a bad idea. Don't do it. Let no deceive you. All those people telling you pay money, I'm going to give you a signal. Don't do it. Learn to trade by yourself. Subscribing to a signal group is the worst thing that can happen to you. You blow your account. I guarantee you that. And so many people have fallen prey to such kind of things. The best thing is for you to learn this trade by yourself. You can learn it. You can learn it if you are willing. The thing is, are you willing? If you are willing, you can learn it. Make a decision to learn it. I mean, out of Tuesday. Please send with the latest class video. Okay, I mean, out of Tuesday. Okay, yes, this video. Okay, so you can learn it. It's better you learn it by yourself and don't rely on anybody to give you signal. I will make this in learning. Okay, just try your best to learn. At least spend at least 1 hour every single day. Nice meeting you, Samuel, too. Spend 1 hour, at least an average of 1 hour to learn this skill. If you spend an average of 1 hour, you'll be surprised where you can be in the next 5 years about this skill. Don't be in a hurry to learn everything one day. No, if you go in a hurry, you will not understand it. So somebody, what's reward to risk ratio should I aim for? We'll talk about all that in risk management, but I have lost over 1K in Forex so far because you have not really learned. So it's normal that you have lost. That's fine. You learn a lot. Just give yourself time. All right. Thank you, John. God bless you too. We appreciate that. Thank you, Nimotimi. All right, guys. Read the books, read those books that have been given to you. Don't fail a day. One thing about learning is about consistency. If you're consistent in doing one thing over and over, you will see a result. Learning is all about repetition. If you don't understand it, watch it again. If you don't understand it, watch it again. By the time you watch one video over and over, you understand it. By the time you read one book over and over, you will understand it. The key is to be consistent in doing what you're doing. If you're not consistent, you won't learn it. If you come learn today, you have not watched a video for the next 5 years, for the next 5 days, or you refuse to watch the video in the next 1 week, you will not get the skill. But when you are consistent every single day, consistency is what compounds. When you're consistent in doing that thing, no matter how this, you get the result. When I got started, my mentor told me that he said, if you are going to spend an hour every single day learning any skill of your endeavor, he said in 5 years or less, you become a national expert in that field. And I tried it and it works. So give yourself at least 1 hour every day. For you to become an expert in anything, it takes an average of 10,000 hours. So 1 hour every day, 5 years will give you 10,000 hours. Just spend 1 hour, at least 1 hour to learn this skill. If you do it for 1 week, do it for 2 months, do it for 6 months, do it for 1 year, you'll be surprised where you'll be in trading. You'll be teaching other people how to trade yourself. So be consistent in your learning. Don't stop learning. Keep on learning every single day. Read books to prepare your mind for success. Like I told you, trading is 80% skill, 80% mindset and 20% skill set. The more you immerse yourself with positive words every single day, the more you surround yourself or engage yourself with positive things you hear every day, the more your chances in this business. Commit to excellence, commit to learning. Tell yourself, I'm going to do it. If anybody can do it, I am going to do it as well. Once you have that kind of dedication and mindset, you can succeed in anything you want to succeed in. For me, I can learn anything I can learn in this world. So guys, thank you for coming once again. I see you in the next class. Good night and have a good evening.